Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, June 10th, 2022. So, the week is closed, the market is broken. Everyone who made bets in this box is either very happy or very unhappy. Either they're drinking either they're drinking champagne this weekend or they're drinking bleach. And hopefully you're on the champagne side of things. So, we called it pretty well in the room, I think. We got folks short yesterday, and then we had another trader in the room today pin the close. They put in about, I think, about a buck 25, and they took out about a nine and change in about 20 minutes. So I'm led to believe that a buck 25 to $9 in a few minutes is a good trade. But let's kind of talk about what's in front of us here. So we got the CPI print today, hotter than expected. The number must have leaked yesterday. The market started selling off for no particular reason that I saw ahead of the number, which usually means like Goldman or someone has it. But let's kind of look at what could happen next because I'm seeing some really gnarly signals here in the market, and I just want to point them out to you. So normally I would bring you SPY, and this is going to be one of those videos where we're just going to talk about the index, and we're not really going to talk about stocks because there's not very many things that are green. So at the very end of the video, I'll leave you with one thing that I think is interesting going forward. But let's focus on the index for now. And if you understand what we're saying about the index, if we say that the index is positioned to go lower, that means whatever stock you're in is most likely going to trade lower, right? The index here and the stocks, they're all kind of one thing. So it's kind of a red-green kind of situation. So I don't think there's a ton of edge necessarily in talking about picks as much as there is focusing on the index and volatility. So I'm going to use the QQQ here because it's the weakest index and it kind of shows the setup best. You traded in this like 9-day box here, and it was looking okay, right? You know, there was a couple points there where it looked like it might break out, and then yesterday it started to break down. So whenever you see something like this, you always have to ask yourself, is this distribution or accumulation? And it could have gone either way. I was seeing a couple signs that allowed us to start getting short yesterday in the room before the break. And that was really outside of the market. I had shared some of those signs with you guys here, I think, in the last video. And what we were looking for was the dollar, the Dixie, to be under 104. We were looking for HYG, which is junk bonds, to be above 78. We were looking for stability in the bond market, and we were looking for stability in the VIX. And very early on, the bulls lost HYG, and then their entire case fell apart. So that was really the kind of the signal there before it actually triggered to actually get short this. Now, the important question is, well, what's next? When you trade in a box like this and it turns out to be distribution and you have so many people that have conducted business in this box, basically now they're all kind of hung out to dry, right? Because if they're still holding, they're wildly uncomfortable, right? And they're just ready to sell on any kickback to falling resistance. So the structure is very, very bearish at this point, right? Wildly bearish to some degree because of the amount of trade that occurred here. But then you start looking at the signals or the indicators. You see how the indicator wanted to go higher here? The squeeze was going up, and then it now has this hook lower, but it's not in a negative orientation, right? So what this means is that there's a ton of speed coming down before it's even going to go into a trough, before it could even turn. So this is a very dangerous situation for the squeeze because you can really really swing it lower that way. Here you have a downtrend, right? I think that's obvious. The red line has been above the green the entire time. So when you have a downtrend, that's usually enough to just say, hey, we should be looking to short. But when you have a downtrend here and you then get this signal down here, you see the red arrow? That's actually the worst signal because in that instance you have a downtrend and you now have a thrust lower. So it was already moving, the trend was already lower, and then you get a shove lower that's nowhere near way down here where it would normally bottom. That's literally the worst, most bearish signal possible. Also, you might note there's a magenta up arrow right here followed by a red arrow down. Now, this is a little bit advanced using this indicator, but what you should expect is the magenta arrow is kind of the setup. So it's kind of like, hey, get ready to buy, right? And then it would look like this. You see how you got the magenta, get ready to buy, and then the green, buy. That's the signal. When you get the magenta and it says get ready to buy, and then it breaks short like this, it's actually kind of the equivalent of pulling the rug out from someone, right? Because you never actually got the buy signal, but you got the ready to buy signal. So when a ready to buy signal flips without giving the green arrow right to a red, that is literally one of the worst signals you can have on this indicator. So if you put all the three indicators together, and notice we're kind of even ignoring price for now. I mean, I could throw price in there and say that you have a negative cross now back on your moving averages. We don't even have to talk about that. Every one of these positions of these three indicators is the worst possible position it could be in. The worst possible position this could be in is exactly like this, up and hooking into a trough, but nowhere near a trough. That's the worst possible signal. You're in a downtrend. That's the worst possible signal. The ready setup here and then the rug pull is the worst possible signal. And then we could, of course, throw structure in and say that a fresh cross down is also one of the worst possible signals. So I'm looking for this thing to get much, much lower. I mean, you know, we've kind of set you up for this for a while. You know, I told you SPY 340, 350? Was the expectation. Basically, look for the SPY to go to the weekly 200. So I think that might actually come in around 360, 350 right now. That's kind of where we're looking. So you should be looking for shorts here. Now you do have an open gap. So on any kickbacks to, you know, if it pops on Monday for whatever reason, or whenever it does pop, because it will pop at some point, not to a new high, but back to resistance. Every pop to resistance is a sell. We looked at all of the pillars that the bulls had, which was the Dixie, the bonds, VIX, and HYG. They had all four to start the week. They've lost all four. And they started losing them even before yesterday, right? They started losing them the day before yesterday. So everything's aligned here. Everything is bear. Next week is Fed. There's also a couple of more central bank speakers outside of the world. So I think like the Bank of England, I think, also has a rate decision. Maybe the Bank of Australia has a rate decision next week. So it's going to be a very volatile week. And it's monthly June OPEX, which tends to be a very large one as well. So you might get some shenanigans, but by and large, everything is aligned to go lower, and you should be looking to sell everything on bounces, ideally bounces back to resistance, and you look to test the lows again. I don't think the lows will hold, personally. So the lows here on Q's 280, on SPY it's 380. I don't think they hold when they get revisited. You're coming in way too hot, and your signals are just literally as bad as they could be. So I don't expect for these lows to hold for longer than a day trade. And once they break, that opens up the door for that final push into the weekly 200 on QQQ and on SPY. All right, guys, that is my time. Don't mean to be gloom and doom, right? I know this is YouTube. This is a place where you watch cat videos, so who wants to watch a bunch of gloom and doom? But, you know, I just got to point it out how it is. And hopefully the indicators are so simple and we explain them well enough that you just see it on the charts. So it's not even my opinion. It's just what the indicators say. If the indicators change, which I cannot imagine they will, but if they change, we'll change with them. But at least for now, going into next week, look to be selling kickbacks to falling resistance, look to break the low, and look to go significantly lower in the markets until inflation gets checked and the Fed can be a little bit less aggressive. All right, guys, that is my time. Don't forget to leave us a like if you found the video helpful. Leave us a subscribe if you're not already subscribed. And I'll see you guys next Friday. Cheers.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me